All right, welcome back to another episode of Not Financial Advice. I'm going to ask you to like the video, subscribe to the channel, because yesterday I had a pretty fun, exciting day. Got all tuckered out, passed out on my couch, woke up at 3 a.m., and figured the best use of my time would be to spend 5 hours updating a spreadsheet that contains all my holdings and lifetime performance of my portfolio. So if you are looking forward to take a look under the hood and see how my portfolio has performed over the last 2.5 or so years, hit the like button, subscribe to the channel, and we're going to get started. So first thing we can see here is the market is down 0.21%, but looks like it's trying to move higher. So the market is just down a marginal amount this morning after running nearly 8% in a month. So that's definitely something to be expected. Now, let's take a look here today at the heat chart over on FinViz. So let's take a look over at FinViz to see how different sectors and companies within the S&P 500 are performing today. What we can see is that this is a rough day for big tech in the upper left-hand part of your screen. Chips in that upper left-hand part of your screen are not doing well either. These are the names that have driven the S&P 500 higher this year, but have been cooling off here in the last few days. What we see is today's looking really good over on the right-hand side for healthcare and consumer defensive, as well as financials in your bottom left-hand corner. But Amazon is taking a huge hit in consumer cyclical, with Tesla up just about the same amount. So that's just sort of a pulse on the market right now. So in looking at the returns of my portfolio over the last 2.5 years, I started investing probably on or around April 1st of 2021. So we were in towards the tail end of the recovery bull market, and quickly piled in about $5,000 or $6,000, maybe $4,000 into some stocks in this late spring of 2021. And so I think it's worth speaking on. I ended up taking $600 profit and moving those gains into different positions, which to today's date has not panned out perfectly, but this is our last update on my portfolio. This is from 2 months ago. At the time, I was down $2,700, which was a decline of almost 5% over the previous 2 years. So let's get back over here to Google Finance. And if you just take a quick glance at this, this is sort of the similar configuration of the S&P 500 heat map, except this is what pertains to my specific holdings. So just glancing at that, you can get an idea or a preview of some of the things that we're about to look at. But let's come up here to the top on the bar graph side. So the market is down 0.22% last time we checked, with consumer defensive and healthcare stocks doing well, where I'm overweight. My performance just for this morning is looking pretty good, and we can see an update. So I've been able to add over $10,000 in the last 2 months to the portfolio. And what I've been doing as of late is, as these different technology names are soaring, I'm buying into other sectors or companies that people are less interested in. So I've been sitting this one out for the most part, buying a lot of defensive stocks. 2022, when tech stocks were down, I bought as much of those as I could, but my income wasn't as steady in 22 as it has been this year. So the update on the portfolio, it's up over $10,000, and it's going to be driven for the most part by my contributions. But now we can see that our unrealized losses are a lot better. So I'm down about I guess 0.75% on an annualized basis over the last 2.5 years, under 1% in declines. Now, I'm not including dividends. Every dividend that I get, I reinvest. So I don't think we should look at the performance of the portfolio based on dividends. Additionally, I would ask you to like the video and subscribe to the channel. But what I would say is that, of course, you have inflation as well, which is something to keep in mind. So, my annualized returns have probably been somewhere around the range of -3% over the last 2.5 years. And so we touched on this in the last video, but early in 2021, I got into Amazon, Smith and Wesson, and marijuana stocks at way too high of a price, too high of a valuation. And so looking back on my contributions, it seems like my biggest year of contributions has been this year. And then unfortunately, 2022, the bear market was my lowest year of contributions. That coincided with my personal income situation. And in second place were my contributions that happened in 2021, which was from April 1st to December 31st was a bull market. So I positioned myself for a really rough 2022, which I spent doing nothing but buying as many growth stocks as I could. As they're now rallying, I'm looking to be picking up these more defensive names. And so I do feel that the next 12 or 18 months is going to be where I'm going to be able to see some real performance and hopefully outperformance in the portfolio. I have a few reasons to believe that might be the case, but let's just do a review here. We'll review anything that's is upwards of about $650. We won't go into each and every name, but in order of the holdings, what we're looking at today are my holdings organized by a total unrealized gain and their money weighting within my portfolio. So about 22% of my holdings are in a total US stock market index fund. We can see that that's up nicely. Amazon I've been averaging down into, and it's been rising quite a bit. So at some point, we're going to get where we need to go with that one. As I mentioned before, averaging down on Smith and Wesson, and that's moving in the right direction, but some pretty substantial unrealized losses there. Winnebago, I've made 0.5% in 2.5 years. So that's not super fun. But Vanguard small cap value, it's a newer position. It's doing all right. Alphabet, I'm up just a bit. Bought some of that in 21 and some of that in 23 when it was higher. But I have a nice position size there relative to my portfolio. Also looking really good and up on Williams, Sonoma, Netflix, Visa, a Vanguard Growth Index Fund, and KOF, Mexican Coke. Then rounding that out, we have Apple, Intel, which miraculously I'm up on. I guess that stock's recovering now, so that's cool. Coinbase, I'm up on. Best Buy, I'm down on, and they're having a rough time this morning. Just reported earnings where they did good on EPS, lower on revenue, and then offered lower guidance for the next year. So that's down about 5% as of my last checking. And so I'm going to go down and scroll down. And here at the top is Charles Schwab International Large Value, Large Dividend. That's just under $1,000 in weighting. I'm not going to read all these, but I'm going to take a second here and pause and just sort of let you scan the way I've weighted different things and what my all-time performance on different things are. And so we see Charles Schwab International Dividend Equity ETF SCHY at the top, and on the bottom we see TAP Molson Coors, and that is under this 1% threshold in my portfolio. So if you want to look at these, you can pause it if you haven't caught up already, and then the last thing I'll do is I'll show you really pretty small position sizes I have held throughout the portfolio. If you'd like to review these, you can pause here as well. The bottom one is Coca-Cola. We're going to start off there to look at the rest of these. You're able to pause here as well. This is a glitch. If you look all the way down to Caterpillar, you can pause if you want to review what's on this screen. If you go all the way down to Caterpillar or AutoZone, that's showing as a zero. AutoZone is like a $2,500 stock, and I own less than one share. So anything that's a fractional share here is showing up as zero. So the current value of the portfolio, I believe, is closer to 63,400, just a bit under that today. I believe it's probably right at 63,375. So missing about $100 in value here, just a little bit of a glitch with Google. But this is what we'll look at. So not taking into account dividends, not taking into account necessarily inflation, but understanding that we have had a good amount. I've been down, around 1% per year over the last 2.5 years. And so I am not equal or overweight in tech. I've just ran a back test. So I've back tested since the beginning of 2021. Invesco's S&P 500 equal weighted index ETF. And so my portfolio behaves more similarly to that. And what we can see here is the RSP, the Invesco S&P 500 equal weight ETF, which is represented in blue here. We can see that this has had annualized returns of 4%. The market's returned 5.4%. So, I was just starting to invest somewhere around here. So I missed out on the first part of this run. But what I'll tell you is, when you see, the RSP was down 12% last year. It's down 2.5% this year. I feel that I am overdue for some strong performance in the next year to 18 months. I shared with you essentially what the top 10 holdings were. And so I'm just going to end this video by sort of showing the momentum that are behind my top 10 holdings at this time. And so the top holding is Fidelity's total market index, up 19% for the year, with a lot of momentum behind it year to date. A lot of momentum year to date on my second largest holding, Amazon, which is also represented in this total market index fund. Momentum, we're seeing a huge amount of momentum on Smith & Wesson, which is a top 5 holding for me. A lot of sideways trading in Winnebago, but we're starting to see some momentum in that. So I think some value is going to be unlocked. All three of these companies, Amazon, Smith & Wesson, and Winnebago, when I bought them initially at a price that was too high for the moment, I believe that they were undervalued then, and I believe they're equally, if not further, undervalued now. So we're starting to see some value unlock happening. So I'm definitely looking forward to that. Not as much action on Vanguard, small cap value. This style and segment of the market's usually returned about 12.5% over the last 15, 25 years. So this is historically trading at a pretty low multiple. So I have a high position here. A lot of momentum on Google. Rounding out my top 10 holdings, huge amount of momentum on Williams-Sonoma, where I have a pretty big position. Great momentum on Netflix, where I have a great position. Great momentum on Visa, where I have a pretty solid position. And then really, really strong momentum on Vanguard large cap growth. I'm glad that I did have that in the top 10 as it's benefited greatly this year. So we'll come back to my portfolio over here on Google Finance. Let's do the little refreshy. Okay, so the market is sort of in the same place it was when we started the video. But my portfolio is feeling a little bit resilient today, down 0.16%. And this has reset itself, showing that some different types of companies are doing good are gold mining, Tesla, cannabis stocks, some consumer defensive, more cannabis stocks are doing well. AutoZone, Kraft Heinz, TAP, some good performance by value stocks here as well. So really a pretty mixed day in the market. So we will go ahead and come back here and we'll just sort of take a look at the weighting of my top 5 investments. On the way out, I'm going to ask you to like the video, subscribe to the channel. I would certainly appreciate it. 9% Amazon, 3.6% Smith & Wesson, 3.5% Winnebago, 3.1% VBR, Vanguard Small Cap Value, 2.9% Google, 2.5% Netflix, 2.5% Williams-Sonoma, 2.2% Visa, and then 2.1% VUG. All right, this is where we'll end it. Thanks for tuning in, and I will see you on the next one.